little bit of raw chicken juice, some ketchup, an apple core, some potato skins, a little wet sponge sitting in the bottom. That was what my trading looked like until not too long ago, and I can confidently say it was one of the worst, most detrimental ways I could have approached trading in any capacity. Now, I know some of you guys are really, really nasty. I don't even want to know, but that's okay because we got the big guns coming in to help clean it up. So what exactly is this kitchen sink style of trading that I speak of? Now, if I do sound like I have a list, that is because I do, and I got Invisalign yesterday. So I'm trying to be good and wear it, and we're going to have a little bit of a list for a couple of days. So deal with it. First things first, this can stem from a mindset where you always felt like you had to maximize your gains. Now, when I say that, I mean we come into the markets, many of us, probably from an investing background, like we get into the market like, oh, stocks, oh, investing, oh, like Roth IRAs and compound interest. And we learn a lot of things from an investing mindset. And that mindset tells us you gotta get your money to work, right? If I have cash, that money needs to be in treasuries. It's got to be in a high interest savings account. It's got to be in the stock market. It's got to be somewhere, real estate. When in reality, when you're trading, that's not always the case. And let me tell you, when I flipped that switch and I was like, hey, you know what? I don't have to have my money working for me all the time. That was a big moment, and that has massively simplified and cleared up a lot of these problems for me. Now, second, the kitchen sink can stem from an inability to consolidate, meaning like you can't just separate, your forks and knives. You just throw it all in. Your plates, dishes, forks and knives, scraps from the table, all this stuff. When in reality, we can consolidate into our highest probability positions. Instead of saying, oh, well, that chart looks good. Oh, that looks good. That looks good. Oh, this guy told me this looks good. And next thing you know, you got a ton of positions. And I did this myself. I said, hey, I'm going to buy a little bit of that, a little bit of this, a little bit of this. Next thing you know, guys, I had 20 positions in my account. I'm like, oh my God, it's too much. Too much. I can't keep track of this. First, and second, it's not trading. Let me explain a bit better with a current example in crypto. So right now, as I speak, we're in a crypto bull market. Now, maybe the top is in, but we've been in a bull market from when I'm making the video. Now, I could have gone back 6 months ago. If I recognize we're in a bull market, it's the same as right now. If I recognize that, what do? You look over and say, hey, well, if we're in a bull, alts are probably a good spot to be. Let's go look at some altcoins. Let's go look at the smaller cap positions, and let's look for the stuff that has a much higher potential ceiling than maybe Bitcoin, which, could do very well, and it's done great in this bull from the low, but you can get much better gains elsewhere. So what do? Many of you may be doing this right now. What you do is you end up buying a ton of positions. Instead of consolidating into a couple core positions and having a bigger size, you say, you know what, I'm going to minimize my risk by spreading that money out. And in theory, it makes sense. Don't get me wrong, it makes sense. The problem is, go back to that investing mindset, and maybe it doesn't make so much sense because when you're investing in like large cap companies and ETFs, yeah, diversifying is good, but when you're trading small cap altcoins, it's a different game. You are relying on the bull. So you're not really playing a game of, are these good projects, blah, 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 because you got so many of them. You're playing a game of, if the market keeps going up, if the bull continues, I will do well. So now you're hoping for the bull to continue versus objectively looking at that and saying, hey, based off my set of criteria, there's a higher probability that will continue versus not continue. And then you're in those individual names that may or may not correlate perfectly to how the overall market reacts. So when times are good, you're good and you're doing well. Now, let me give you my own example. Back in 2019, I got into penny stocks, and that was my senior year of college at Penn State, and I got into penny stocks, and I was like, hey, let's start trading penny stocks. And I got into a swing trading strategy, and I was buying bottomed out charts on small caps, penny stocks, essentially. And then eventually, as we rolled into 2020 and the first 2 months of 2021, as many of us know, if you were around for that, the market was very good. It was easy to make money. You can pretty much buy any penny stock you wanted to, and it would go up. And that's what people look for. They look for those cheap stocks. The problem was it started off very well. I made more money. And so you start sizing up little by little. I had no concept of when the top was going to be in. I had no concept of a bear because I'm like, market keeps going up. Well, we should keep going up in small caps. That's when things changed. And now the small cap market deviated from the overall stock market and it did its own thing. And we were in a bear in early to mid 2021. And that continued all the way through 2021 and 2022. And even in 2023. Because small caps have never been the same really since. So I was bleeding. And the problem is, if you want to think about it from like a pizza dough perspective, which is kind of random, but if you think about pizza dough, and if the dough is not super wet, and you stretch it out, and you're making it larger, right? Because you start with this big ball of dough, you start pulling your money, your capital, in all the different directions, and you spread it out. When you spread yourself too thin, meaning you're like almost over diversified, and you're in too many positions, what ends up happening is you get some holes. And when you have holes in the dough, it's very difficult to put that back. And unless the dough is very, very wet or very, very moist, that dough is not going to reconnect. Like you kind of screwed yourself and you ripped the dough. And maybe you haven't even reached the full pizza size that you wanted to. So as you get to that full size, those holes are going to get bigger and they're not going to get patched. Now, this is kind of a good example of current positions, as in you're taking on water and your current positions are bleeding, as in my case, when the market rolled over. But also, it sets the stage for, in the future, bad habits. And when I sized up, I had these terrible habits. I wasn't actually trading. I was hoping that the market would overall go up and that a rising tide would lift all my boats. And in that case, when I sized up later on and that wasn't happening anymore, I lost more money. So it caused more problems later on down the road. So like I said, you're really just hoping that the market will go your way versus trading something with a strategy or a skill or, an approach or a system. You don't have any of that when you're trading the kitchen sink method. So don't let the good times fool you. Always step back and try to think about what you're doing, what the intent of each of these positions are. Can I consolidate? If I have 3 positions, can I say, hey, if I'm in X, Y, and Z, but Q is the leader in that sector and it's the strongest and I'm betting on the bull side, well, why wouldn't I just go put more money into Q and play Q instead of spread my money thin in X, Y, and Z? And now I got to manage those positions. I got to think about them, and I have to worry about them correlating perfectly when they don't correlate as strong, right, as the core or the main leader of the pack. That's the point I'm trying to get across. Because when times are good, you think you know what you're doing. When times are bad, you make an absolute fool of yourself. Stay safe and keep that sink clean.